Sorry, couldn't get my mic working. How are you all doing? Sorry, I'm here. I'm back. What's going on? One sec. Morning. It's going to be one of those mornings this morning. I can feel it. How's everybody doing? Happy Monday. Morning, Steve, JC, Peter, Amy, Baggy, Harold, Virginia, Jerry, Christian, Joseph, Kennelly. How are we all doing? Mimpo, morning. So let's start off with a quick recap of news. I've closed some stuff out this morning. Let's start off with a recap of what closed out this morning. And what I'm about to close out, I think, New Zealand dollar, US dollar, I'm not sure. Thinking. Yeah, so closed out a few bits and pieces this morning. US dollar yen. That's not right. I'll close out US dollar yen. What are you talking about? Reorder. Aussie dollar yen. Just close that one out. Straight in, straight out from Thursday. Same as the trade from Monday last week. Why is my pen all the way over there? So took this one on the H1 RSI extension on Thursday, out today. So that's a nice, quick, easy, I think that was an ADR 81, roughly, pretty much an ADR-ish. So yeah, close that out. Aussie dollar, US dollar, close that one out as well. That was an H1 RSI extension from Wednesday. Big, strong push, had 3 positions in on that one. Close that one out. This is probably going to come down into here, I suspect, which is ADR, but I'm out. Done. What else have I closed out today? Pound odd. Again, straight in, straight out. H1 RSI extension, in, out, done. That was a lovely little trade, that pound odd. Both directions. So got short entry on that extension. Took that one off a bit early, but got out on the same day, got in long on the RSI extension, straight back out again. Very nice. Little swing. What else have I closed out today? CAD Swiss. Yeah, so done some drawdown control on CAD Swiss, unfortunately, due to swap. Nothing you do about this. Pain in the backside. So we just had a little, done some drawdown control basically based on that swap there. So basically they spread down 17 pips, which is about a third of an ADR. So stopped out some positions there, just partial drawdown control. So got 0.5% banked so far this morning. I've got New Zealand dollar, US dollar in profit and Aussie dollar CAD, which I'm contemplating taking a bit off of this New Zealand US, just because looking at it, it's such a massive move. I think we're probably going to come down and test this area, but there's a fair decent bit of cash that I can bank there. And then I'm still sitting on one position in profit and the average is going to jump to here. So if I take this trade off here, the average on these two is going to be well within an ADR. So I can hold those two down to there, but it just guarantees that goes into the bank today, basically. So that's what I'm going to do. Yeah, so just close that one out, which banks a little bit more. And then obviously that's still in well within reach. It's just we're hitting these propulsion gaps off of this accumulation. So what I'm concerned about is a bounce out of here. Take it, put it in the bank. 3 minutes to the open. News-wise over the weekend, we've had a lot of China stuff going on, which doesn't concern us. Nothing particularly exciting from Friday at all. So, yeah. Over the weekend. News this week, it's all factored this week around tomorrow, basically. So today we've got a bank holiday in Japan. We've got Lagarde speaking later, and we've got the Empire State Manufacturing Index, which doesn't tend to do an awful lot. That's before the news as well, so probably not going to do a lot. Aussie dollar monetary policy meeting minutes, we may well get some decent movement off of that. But the main news tomorrow is retail sales and CPI for the Canadian dollar. So this is the main market mover tomorrow. We've got CPI quarter on quarter for New Zealand coming, and then the the pound CPI on Wednesday. Unemployment for the Aussie on Thursday and for the US. And then Friday's kind of nothing. So very light news week this week. We have got obviously CPI figures, which are massively important for the New Zealand, for the pound and for the Canadian dollar. But they're kind of a little bit spread out. So apart from that, very, very light week on the news this week. Morning, Andres, Thomas, Outro, Burke. How are we doing? Right. So there's your news covered. Looking at the DAX this morning, which is about to open in 30 seconds. We've got a gap fill to the upside, small gap fill to the upside this morning to do. We've got a gap fill from the break on Friday, which is kind of debatable whether that was a fill or not. I would kind of class that as done, to be honest. So quick push up this morning leaves us ready for this pullback. So I think shorts to start off this week are logical because we need to have a pullback on this multi-day run. So yeah, quick long ORB. So there's your pre-market 15 ORB long. Try to get up to that gap fill. That'd be the initial play this morning. I think it's probably the best thing to do. And then obviously when the gap fill's done, if they decide to do that, we can obviously go short. But we know they like to leave gaps in play. So we may well just tank and come back and do that at a later stage if we're going to continue this little bull run that we've got going on the DAX. So we will see. Overall, obviously, DAX is bullish at the moment, but we're in a very, very deep pullback. So it is bullish overall, but at the minute, we're kind of rounding top, starting that rollover potentially to come back down. Other US markets touch and go at the moment as well. So we'll see. Morning, Burke. Morning, Day Trader FX. So yeah, so those are your options this morning. We'll see where we go. At the moment, it's just a whipsaw on the pre-market. It's gone long, flipped short. So we're just testing the pre-market lows here at the moment. If we go out to the downside, target-wise, it's very difficult to target anything. It is going short. This high here, basically, this little accumulation before we pushed up, is probably the next viable support to the downside. Obviously, we've got the low from the previous day, which is just coming up in a minute. That's part of that accumulation there. So if we break that low, there's nothing really at all on that day from a levels perspective that you would expect the market to bounce at. So it's kind of a flush day today if it does go down, but it can't decide where it wants to go at the moment. We'll see where we go. Right. Just wait for that to that opening range to go in. Fairly big opening range today. So at the moment, a break of that level for a direction. And then obviously, if you're buying, you're going to go straight into resistance potentially. And if you're selling, we go to the downside. So at the moment, just a whipsaw. Right. ADRs, nothing today. Obviously, it's the first day of the week. So there's no weeklies because we've got no dailies. So there's nothing to look at all on ADRs at the moment. We've got 2 monthlies at the moment to look at. So we'll have a look at those, which is the CAD Swiss and the US Swiss. So CAD Swiss, obviously we know we've had this big, strong push down. So obviously the monthly level's already been hit. We're coming down to the previous monthly low as well. So ADR today is that monthly low. So if it does flush out a little bit further today, that is where I would expect us to get a bounce. If we get down there today, I will be putting an aggressive drawdown control position on this one. So we've got 1, 2, 3, 4, 5, 6 trades on now, long on this, since we literally got into that first entry there, which was a nice, big, deep RSI extension. Absolutely nothing wrong with that entry at all. That was really extended when we got in there. Just completely collapsed. The Canadian dollar collapsed. The Swiss franc went absolutely nuts. So just the perfect storm, this one. Completely filled all propulsion gaps to the downside, left lots of propulsion targets to the upside. So if it gets down to there, that would be a perfect spot for taking an aggressive entry. That average will then jump probably down into that propulsion gap and be out very, very quickly and easily. But also good opportunity to make a lot of profit on that pullback. So if you measure this one, where the move started, if we get down to, where's the fib? There. If we get down to that monthly low, which is there, the 50% retracement is bang in the middle of that propulsion gap. So where that accumulation was for a day and a half, 2 days, that's the propulsion move that started. That's the news, basically. So I would expect them to at least come back and test that level. So all these TPs move down into there. That's a big profitable trade if that comes off. So that's kind of where I see the CAD Swiss. US dollar Swiss. Again, obviously big, quick sell-off there. Again, nicely extended. We were down at the 20 level when that initial entry was taken. And then obviously we had the news and everything and just huge collapse. So again, when I keep talking about exposure, yeah, look at this trade and look at the CAD Swiss. The Canadian dollar and the US dollar, we know, move in tandem. They move together. Yeah. The Swiss franc obviously gets money pushed in and pulled out of it very quickly because it's a sort of safe haven currency. So these two trades, if you look at the price action here on these two, they're virtually the same. Yeah. So again, when you're looking at exposure, we say, don't take more than 2 trades on an Aussie dollar in one direction. You also need to bear in mind that the US dollar and the Swiss, as they move together, if you're taking a CAD Swiss long and a US Swiss long at the same time, there's a good chance they're going to move together as well. So if you look at those two, flicking between the two charts, virtually the same price action, massive drop. So this one's got pretty much the same position on. Yeah, so we've got 5 positions on this one. There's no really good support resistance coming up on this. You got to go out to daily, basically, to find, not even on daily, look. Down there, all the way down there, which is not going to happen, is it? So that's basically when they removed the Swiss franc peg. That was the Black Swan event that broke all the brokers. All the brokers went bankrupt. That's the next support to the downside. So we're out basically in kind of all-time lows here. So just reliant on basically waiting for price action to go back in the other direction. So we've got 5 on that at the moment. Average is pretty much ADR because the spacing's really nice on these. So there's no reason to get aggressive on this one at the moment. If this H1 market reversal holds, the retest arrow is showing on the swap. But if that comes and retests and we get that W pattern back up into these propulsion gaps, again, this one here, accumulation, this double propulsion gap here is kind of one massive news event. Somewhere back up into there will be a 50% retracement. So if we're going to push down, pull up, and then drop, that's where you'd be looking to do it. Otherwise, we're looking at a V-shaped recovery if the US dollar powers back up again. So that's those two. So those are your monthlies. There's nothing else on the weeklies or the dailies. Let's quickly look at what the DAX is up to. Mess this morning. So flip long on the, well, if you've taken the 5-minute ORB, you're long. If you took the pre-market, just a whipsaw today. Total whipsaw. Let's quickly look at what the US indices are up to as well. So we're bullish on the NASDAQ. Nothing on the S&P. That was a bit bearish. So yeah, no clues there at all. It's earnings as well this week. Earnings fortnight. So well, earnings 3 weeks. Kind of called. It's called earnings fortnight, but it lasts a bit longer. But it all really kicks off this week. So date today is the 17th, which is here. We've got no earnings today. So towards the end of this week, or middle to end of this week, we start getting busy with the earnings. So we've got Netflix and Tesla and IBM and Goldman Sachs. I mean, they're all biggies. On Wednesday, we got Johnson & Johnson. Nothing much else that week. This is the big week, which is next week. This is where it all starts to kick off. So we've got, you can see them all there. Google, Visa, everybody, basically, Facebook, Etsy, the lot. They're all coming out next week. So this is the biggest earnings week of earnings fortnight. And then next week, we've got some other big players as well coming in. But next week is when we're going to see all the volatility starting to come into the indexes. So should be really good opportunities for money making at the opens next week, because we'll get some big days put in, some big ADR days. So just be aware of that. Always worth checking this. This is where I go and get mine. I'll just put a link in the chat. Interactive Investor, basically, just so you know what's coming up. It's not a case of which, you can't tell which direction anything's going to go, but it's a case of, it gives you a good idea as to what volatility is likely to be. So if you've got lots and lots of earnings pre-market, you're going to get a big open. If all the earnings are coming after market, the next day, you're going to get the impact of these ones. These ones are after market, which are after the market close. So just be aware of that this week. Right, DAX has gone long. So we're just coming up for gap fill, which isn't far away. So just watch this area. So this is Friday's low. So once we've got that done, opens up a possibility of a short play today. So again, as I said, we're looking for a pullback. Either this is going to be kind of double toppy area and you're going to force us back down before we put a new leg in, or this is a lower high in market structure, which is bearish, in which case then we're still looking to go short. So if we do break that high this week, we're in a range, basically. So we'll be looking for areas to the upside for bounces, but see where we go. At the moment, we're breaking long. Right. So RSIs, whiz over and have a look at those. Catch up on the chat. Morning, Amar. Morning from Italy. Bit warm over there, is it? 48 degrees. I'm going on holiday end of August to Croatia. Hopefully it's all calmed down a little bit by then. As much as I like to go and get some sun, that's a bit too much sun. Morning, Nicholas. Morning, Potgator. Right. If anybody's got any pairs they want to look at, let me know. You can see what I'm going to cover on the RSI dashboard here. So we're going to whiz through all of these. There's not a massive amount to look at because most of the stuff you should already be in, because we've had setups all over the place last week on all that volatility. So we're looking for that all to unravel this week and basically make the money. Aussie dollar Swiss hourly. So there's an RSI extension there on the hourly, just below the 30. That's a double bottom with the last week's low. So this black line here is last week's low. Purple line is the previous month's low. So nice double bottom, which we are now retesting again on the Aussie dollar Swiss. Aussie dollar should probably be bearish. Swiss franc, obviously, we've had a big strong move on the Swiss franc. So likely to get a little bit of weakness coming on that and a bit of unraveling. So really good levels on this one where we are at the moment. So if you're looking at support resistance, this doesn't get much better than this whole zone here we're in. So somewhere between where we are and ADR today, if we do get some kind of push and put a little bit of a bull day in, basically is all we're looking for. Good chance that we're going to come back up and retest all these propulsion gaps to the upside. So good looking long opportunity. Not quite good enough for me. I want to be below the 25 before I start getting in, but yeah, nice looking bounce opportunity there. That one's not extended on the 4 hour. It did get extended last week. So you had an entry there last week, which obviously hasn't really moved far enough to get paid on it from that extension there. You may have got out of, but this is really the bounce. So that's what we'll be looking for. It is kind of in a downtrend at the moment, but it's slight. Yeah. So we've basically pushed back up above the 24.72, pulling back down again. So looking for that kind of action if we're going to get a rejection and carry on short, or if we're going to bounce and put in a new trend direction. This is where we're going to potentially bounce from, because this is where we rejected the last few times we've been down here. So Aussie dollar Swiss looks pretty good. Morning, Steve. Euro US dollar, pound US dollar, Aussie dollar CAD. We'll have a look at those. Aussie dollar CAD, we'll have a look at that now because I'm up there. Aussie dollar CAD shorts on this one at the moment from the entry on, I think that was Thursday. So first entry there, second entry same day, because we had that massive ADR move, double ADR move basically. So reverse alert's gone in. We're basically just looking at reversal basically down to there. So shorts at the moment. Longer term, obviously we are coming down. Volatility's blimey picked up on this. Just watching the Dow on my other monitor. DAX looks like it's hit the gap. Yeah, so gap feels done now on the DAX. So see where we go from here. So this is a good potential resistance area. We're going to find basically they'll be selling the lows of Friday. So this is basically where we were not interested in going below on Friday. So potentially act as a flip zone, and we just obviously flip short. If we break back up into that level, though, obviously test a Thursday, really, I think. But just watch this level. So if you've gone long on the opening range breakout, just be aware, obviously, you are buying straight into potential resistance. So probably safe to break even on that, really, if that is going to cause the market to drop and start that pullback. That's where it's going to happen. So good spot to go short as well. Right, just adjusting some orders. I'm just trying to do an ORB on the Dow on the futures market, based on what the DAX is doing. Just trying a little bit experiment, really. Right, that's Aussie dollar CAD. So the other hourlies we've got are Euro Odd and Euro CAD. So I'll quickly whiz through those two. Euro Odd extended to the upside on the hourly. We've got a lovely sort of lower high put in there and a double bottom. So we've basically hit that level at the highs there, rejected it, pushed back down again, come up, rejected it, pushed back down again. And we formed a range basically off of this low. So at the minute we are range bound, approaching the highs. Aussie probably going to weaken. Euro should be strong. We've got Lagarde speaking this morning. A little bit later on. What time is she? 9:15. So haven't heard from Lagarde for a good few weeks now. So nothing much has come out of the ECB to do with anything to do with future monetary policy. Been very, very, very quiet. So we might well get some movement today on the euro based on her if she says anything. But we'll wait and see. So when the rates come out in a couple of weeks, we should expect some rally off the euro. But until then, we might just find ourselves sitting in a holding pattern. So if the euro isn't going to be, if the Aussie dollar isn't going to be particularly strong, which is no reason why it should be, we're probably going to find that we're not actually going to go anywhere. So just holding within this range for the next few weeks is perfectly viable. So RSI extension to the upside on this one. If it pushes up into that high today, anywhere up near ADR, the monthly high or last week's high, that will take it RSI extension over 75, in which case I'll be jumping in short on that one. Euro CAD, obviously massively extended. So 1, 2, 3, 4 positions on this. You can see this one, the distance between these two entries here 150 pips. 95 is ADR on this. So this is 1.5 ADR between these two entries. So it just shows you how strong that move has been. There wasn't a reversal alert for 1.5 times its average daily range. Yeah, so big, strong push, i.e. Canadian dollar weakness. So we got this big propulsion gap here, which broke that high, then follow through. Then we rallied up a little bit. Then we started the next rally on Friday last week. So we're looking for a pullback into either that high there, into this propulsion area, or maybe into that propulsion area there. So at the moment, average for me is sitting here, which is 150 ADR. Reason that's so far away is obviously because of the distance between these trades. So if you can't get an entry, you just got to wait. So big, strong push looking for that to happen this week and just a pullback. Canadian dollar moves on oil. So oil at the moment is coming back down again. So that's not helping the Canadian dollar. So we've had this multi-week rally, which has just been grindy, as you like, all the way up. We're pushing that back down now, and we've got multiple support areas coming up on oil. So this one here is exactly where we are at the moment. We've got last month's high, which is where we had that initial reaction, and then we slammed through it. And then we've got this area here, which is where we tested multiple times, rejected, came up, tried to get through, and they finally slammed it. So this propulsion gap there on the hourly. So those are your support levels. Obviously, you can see the monthly one there, which is that propulsion gap. And then you've got this propulsion gap there, which is the break of all these highs. So either there or there are potential bounce points. 50% retracement, 38% retracement. Yeah, so just normal fib levels, basically for shallow pullbacks. That is assuming, of course, we are going long, which I think we have a good chance of now. We've finally broken out of these highs. We've been trying to get out of these highs kind of since May. Finally broke them. So there's a good chance I think we're going to get a rally to come up and retest that high, which is $83 to $85 a barrel. So that's obviously going to help the Canadian dollar. So looking at these pairs, we're looking at like the Euro CAD. Obviously, Euro should be theoretically long based on the fact that they're going to increase their interest rates at least twice in the next few months. The Canadian dollar, if oil rallies, will be helped along with that as well. We've obviously just had the rates come out on the Canadian dollar, which went up as well. So interest rates have gone up, which means it's bullish for the Canadian dollar. But obviously, this has had the same reaction as we had with the New Zealand dollar when they decided to do the same thing. The market just decided to react negatively. No idea. Just doesn't know what it's doing at the moment. This is the trouble. So if you look at the fundamentals for the CAD, we're now sitting up at 5 with a 0.25% increase. Bullish, yeah. New Zealand dollar had the same thing, absolutely collapsed. It's one of those things at the minute with interest rates, very, very, very difficult to gauge whether or not we're going to be bullish or bearish with any interest rate change that we get. But the nice thing about Canadian dollar is you've got that oil price, which helps it move. So no reason why we shouldn't be looking for a drop on this at the moment. We got 2 weeks until we get some news on the European rates. Well, the next basically Euro news. And we've got the Canadian dollar just had a drop, ready for a pullback. So no reason why that shouldn't come back down again. Other things to look at, pound, euro, US dollar is on the list. Pound US dollar is on the list. Aussie dollar CAD we've looked at. Swiss yen short. Swiss yen isn't on the list. Let's have a quick look at the Swiss yen. Then we'll cover the other bits on the RSIs on the 4 hour. We stopped out on my long. Looks like the DAX is rallying. Trying to rally anyway. So we got rejection. Limit orders triggered off the low. We're just trying to get through that 15-minute opening range now. So this fails here. And we get a bearish pushback, i.e. they're selling these lows. They just started to sell them. So if they continue to sell these and we can't get through this level, I think the market will just break to the downside today. But it's having a good old rally at it. So if you're long on the ORB, low platform, where are you? The hell? Got gremlins this morning. So if you're long on that opening range break, so there's your 5-minute opening range. Yeah, so opening range break is long today. Got the buys on. You're in profit, but batting against the level of resistance. So just be a bit careful with that one. Right, yeah, so Swiss yen. Who knows on the Swiss yen? Still don't know what's going on with any of these yen pairs at the moment. So at the minute, there's a lot of yen longs. It's not actually. Got out some of them. So I've got 2 yen shorts, or other short on the yen and 1 long on the yen. So a bit of a hedge on it, basically. Highly likely we're going to get that pullback, at least on these yen pairs. So if you look at all the yens, we were waiting for this drop, which we got. Now we should be looking for a pullback continuation on it. So pushed up, we knew we were going to get a massive drop on this thing because the Japanese were shooting across the bows saying, you know, if you don't stop devaluing the yen, we will pump it. The market then basically has done exactly what they asked. So with the yen, I'm expecting a pullback on it. So got a few longs on these moves, basically waiting for them to come back down. So there's 2 options with the yen at the moment. Either they are going to start a move and power up, basically because all the other currencies will start to weaken, or this is just a temporary pullback and we're going to rally and try again for new highs. Bear in mind, the US dollar yen is the main thing that the Japanese are looking at, and that is the main thing that has absolutely collapsed. So we've had that US dollar weakness come in along with that yen strength, which has caused it to break down below this low. So we've just put in a new high. Now we've put in a low. So back up here for a lower high, and then continuation down for a lower low. So difficult to tell. It's really impossible with this yen. Everything you can see on the yens at the moment is telling you that the yen is weak. It's rallying. So you look at all of them. Yeah. Not so much the Aussie, but you look at most of them. We're in a big, strong push to the upside at the minute. Yeah. All rallying. Basically, everything is being strong against the yen. We're pushing all the time. So it's very difficult to tell if this is just a pullback on that continuation, or if we've hit the level and now we're going to start to roll over. So take your pick on it, basically. As long as the market moves and extends and profit takes on it, doesn't really matter which way we go, do we? So euro yen, same thing. I'm out of the euro yen this morning, actually. Yesterday, sorry, got out of the euro yen long. Right, we'll have a look at the rest of the RSIs. AZ, volatility has already been discussed, but any thoughts on FTMO removing time limits on their account? How does this impact position trading on prop? It doesn't impact position trading at all, really, does it? Position trading on prop is still going to kill you on the daily drawdown. That's what gets you. Look, this is a fail. 9.2% of drawdown. It's a fail. However, I've made 13.37% profit this month. You know, prop position trading and prop just don't go together, unfortunately. Unless you really drop your lot sizing down to a level. And then obviously, yes, you can position trade, but we kind of covered this on Friday, didn't we? If you drop your risk down to very small amounts, position trade, you will be absolutely fine on prop. But you won't pass your evaluation for a good 2 to 3 months. Yeah. So phase 1 evaluation, 2 months. Phase 2 evaluation, 2 months. Funded, 3 to 6 months to get funded. Just not worth it, is it? Scalp. Be in and out and make $2 this afternoon. Why not do that instead? Position trading and prop, just not, I don't know, just doesn't really make sense. You can do it, but you're in the lap of the gods, aren't you, with drawdown? That's the problem. The time limit's never been the problem. It's the drawdown. Time limit obviously doesn't help, but removing the time limit is kind of like saying, here, this is a rule that we had that never killed anybody. We'll take it away. Makes us look good. That's all it is. Yeah. I've been trading prop for years. I don't think I've ever hit the 30 days. You were either passed or failed in 30 days. Very few people hit that 30-day limit. And then all they would do is give you a reset for free, i.e. take away all the progress you've made and say, nah, start again. So all they've done is they've taken away a rule that really didn't impact anybody. So that's my view on it anyway. I just don't think it makes any difference. It's just a pointless removal of a rule that was pointless in the first place. If you're going to encourage people to over leverage to the extent where they're going to blow their accounts all the time, why put a rule in place to say, you can't hit, you can't go over 30 days? It just doesn't make sense. So they've removed it. But so is my Forex funds. They've got rid of it as well. Basically, all it's doing is if you go over that 30 days, basically, it means you're in stagnation on your strategy. Your strategy is stagnating, not making enough profit, is it? So at some point, it's going to frustrate you. You're going to over leverage and blow it or pass anyway. So the 30-day limit was just a case of them controlling when you over leveraged or got across or jumped to a different system. They've just removed that part of it. I don't think it really impacts anything. But, for position trading, we've had many months in the past where we've never gone anywhere near 5%. We have other months where we're sitting on 10 or 15 for half the month or more. It's you will still be able to position trade some months, but other months you won't. So I wouldn't try. Do it with your own money. The best way to use prop, which is what a lot of people are doing, is to basically over leverage on a prop account to get funds for position trading. So if you can get a 100K account on prop, pass it and then trade it up so you can get sort of 5 to 10K out of it. Obviously, you're going to need to over leverage to do that. 10% a month scalping is incredibly, well, it's impossible to maintain, but very hard to do. But if you can do that, take that money out, stick it in a position trading account, and try and do it again, and try and use this not to make a living. Try and use this to get your money to become a prop trader, a position trader. Best thing to do. Les, I disagree. There are traders on YouTube trading live who do take 4 months to pass prop. Yeah, there probably are. But that's my point, Les. That person hasn't been earning any money doing that, have they? For 4 months, they've been using a demo account to get a certificate. Well done. Not making any money out of it, are they? Pointless. I can make 8 grand in an afternoon. I could also blow an account in an afternoon, but blowing an account cost me $500. Making 8 grand makes me 8 grand. Why would I want to sit there for 4 months to try and make 8 grand? It's just pointless, Anyway, you do use prop how you want. Yeah. At the end of the day, prop firms are there to make millions a month out of evaluation fees. 0.8% of people get paid. Less than 1% of people that take an evaluation actually get to payment stage. Out of those 0.8 people that get to payment stage, none of them hold their accounts for more than 3 months. So this guy on YouTube that you're talking about, who has made 8 grand a month for the last 7 months, he is the one on my Forex funds that's done it. No one else has. Go and look on their website. They publish their statistics. Their statistics are published to say, you can't make money doing this. It's the only company in the world that says, you can't do this. Give us 22 million a month in evaluation fees, please. And we keep doing it. Nuts. Anyway, we've talked about prop many times. But yeah, if you want to go and do it. But use it as a business, right? Input 5K into evaluations. Draw more than 5K out in the ones that you get across the line. Take 10 evaluations, pass 3 of them, use those 3 to make more than the 5K you spent getting those 10 evaluations. That's the business model. That's the way you make money out of prop. How you use that money after you get it out, it's entirely up to you. But don't try and get an account and keep it. You can't keep it because the market is not stable enough to allow you to stay within the rules that they set. They set those rules because they know that there aren't any traders out there that can trade within those rules. Yeah, there are ways that we can bend those rules to make money on the short term, but long term, you can't do it. I, as a trader with 15 years experience, have never, ever, ever had a year where I have had every single month profitable. Last month, I made a loss. 2 months last year, I made a loss. I would, even if I was trading the strictest way I possibly could in a prop account, I would have blown those accounts. Can't do it. Everybody thinks you can do it, but you can't. There's no system on the world, in the strategy in the world, that is not going to take a 10% drawdown. Yeah, that's why they set the overall drawdown at 10%. There are very few systems that can survive a month without taking a 5% daily drawdown if you leverage yourself at 0.5% or 1% a trade, which is what everybody does. They know that. That's why they set the limits there. So you just got to know how to play the game. Play the game by your rules, not theirs. Anyway, sorry, I'm going off on tangent. Because everybody loves talking about prop. Right. Euro yen, just looked at that one. Right, so let's cover all these others. So CAD Swiss, massive extension, as we know, on the 4 hour. Whoops, wrong one. This massive collapse that we've had, so it's basically the same as one we just looked at, isn't it? So we've just looked at this one basically based on the hour. So you can see where we are with this RSI. Last time we were down there was back in April last year. Sorry, this year. What are we talking about? No. Yeah, sorry. 4 hour chart. Wake up. So 26th of April is when we pulled back basically on that drop. So huge drop, huge extension. There's your pullback, 50%. Then we had another little leg down. Huge drop, looking for that 50% pullback at least a 38, if not a little bit more. So big, strong push back up into that level there. So big move, pullback is what we're looking for. Nice extension on the 4 hour RSI, but obviously you will have been in this from when it got initially extended on the hourly or back there when it got extended on the 4 hourly. So you know, this thing's absolutely parabolic. This is what the fundamentals do. You get fundamentals making one thing move very strong in one direction and very strong in the opposite direction. Both of those forces pulling in opposite directions makes the squeeze. Every squeeze has a big pullback. Markets are incredibly short on this at the moment, and the only way they're going to make money is by flipping long. So that's going to pull back at some point soon. Obviously, as we looked at earlier, that's the logical place for the flip. So CAD Swiss, massive extension. Euro CAD, again, Canadian dollar, same thing. Big, strong push there. Got 3 on that on the short side at the moment. Looking for it to push back down. Obvious levels on this. We're bang in the middle of this propulsion gap here. This isn't a particularly great propulsion gap on the 4 hour, but it is that support there, which is what we're running into now. So there's a good chance that this is going to act as a resistance and start this pullback, and then we'll be pulling back somewhere into here. Yeah. Which is this propulsion gap, which is the break of that high, and then potentially bounce point all the way back up into those highs. That is obviously assuming that the euro continues strong, the Canadian dollar continues to be weak. But as we just said, oil is starting to strengthen up. So there's a good chance that this could kind of go into a little bit of a range if we get some of that euro strength coming through, which we're waiting for, but we haven't had yet. So nice short opportunity, though, if you're not already in it. Massively extended, again, up there, looking for that pullback on the move. So big extension there. Euro CAD, Euro US dollar. Big extension to the upside. Again, same thing. US dollar killed, CAD killed. So they've massively, everything's massively rallied against those. Big, strong pushes to the upside. Just waiting for the pullback. Obvious level of support is going to be that high there, which is previous month's high. We hammered into that. They sold it. Then the buyers obviously stepped in and off we go. So looking for a pullback back into there. You've got multiple propulsion gaps on the 4 hour. If you drop down to the hourly. So there's the high. So that propulsion gap there is your initial push off of the news. So that's the day where we had the news and then obviously rally to the upside. So this area here or here, somewhere around there is where we would expect to pull back into, which is where my TPs are. That will be a 50% retracement on that initial rally. So that's euro US dollar, 4 hour. Pound CAD. These are all the same thing, obviously, the Canadian dollar, the US dollar. So that's just starting to roll over. Obvious spot for support is the monthly high there, and then last month's high, which is down there. So previous month's high, if we're going to just do a shallow pullback, potentially there, that'd be more of a flag break to the upside. If we're going to do a deeper pullback, obviously down to there, so that would be 50% of that move there, but roughly 50% of that one as well. So either there or there. My average at the moment is sitting there, obviously, because we've got a fair distance between those two trades because of the strength of that movement last week. So at the minute, there's only 4 positions on it. We'll reevaluate when we get back down to here and see what's going on with the rest of the market, basically. But yeah, looking for a pullback on that, but I think probably more likely we're going to get back down into there. So that's going to be sort of back into your 24.72 area if we're going to continue on this bull run that we've got going with the pound at the moment, which is no reason why we shouldn't. We've got another 1.25% increase on our interest rates coming. The pound is going to remain bullish. It's going to need to pull back, and typically in a bull run, obviously 24.72 is what we use. In a trend. So we're pulling back into the 24.72 zone before we start rallying again. So pulling back down into there before a new leg up is pretty logical. So RSI extension on the 4 hour. We've got divergence on this as well now. So we've flattened, but price is pushed up. So again, all bearish. Lots of bearish signals on this at the minute. But DAX is rallying nicely. So ORB this morning working very nice. There's the entry on the 5-minute ORB, long. So target-wise on the DAX, just quickly while we're looking at that. So there's your pound CAD covered. So pound US and US dollar Swiss to do. So there's your 5-minute ORB. Break there. So sellers didn't manage to hold that level, buyers back in control. So looking for upside targets now. It's last week's high, basically. So, which is basically ADR today. So ADR today is last week's high and the previous week's level there. Is that previous week's level? It's a 3-week high. Last week's high. So yeah, watching this area basically here. There's your upside targets. Obviously, before we get there, we got Friday's high, which is this blue dotted line here. So watch for limit order triggers at Friday's high. And then if they fail, we're off to the upside. That is assuming, obviously, we go for a bull run and we don't go into rotation today. We'll see. Right, so DAX is off. Still no ADRs today. Pound US dollar, big extension on the pound US dollar on the hourly. So got shorts on this, 3 shorts on it at the moment. Average is well within an ADR. Just looking for a pullback on this move. So again, stick your fib on there. On there. A couple of ways you can measure this one. It's a bit of a tricky one. This is why fibs are very discretionary. You could stick your fib like that and measure that entire move. You might decide, actually, I want to go from there. You might decide I want to go from there, which is actually really the start of that bull run. So either way, you're looking at 50% retracement being down in that propulsion gap. That propulsion gap is obviously much deeper pullback, but that is the obvious resistance that we've got to come and retest. But there's other levels on the way. So we're going to need some US dollar strength. So target back down in that propulsion. I've got one target down there. I've got another TP down there. There's TPs all over the place on this one, but it's difficult to tell where this one's going to drop to. I wouldn't get too greedy if you've got shorts on this. The pound, basically, we are expecting strength to continue. The interest rates are still going to be going up. The Bank of England is saying, we've got a lot further to go to get on top of inflation, which we know. It's whether or not we're going to get any strength in that US dollar. So the pullbacks in this, excuse me, pullbacks in this are likely to be caused by a little bit of US dollar strength while we're waiting for the next news on the pound. We have got the CPI figures coming out this week, don't forget. So if we get that strength coming through on the US dollar, I think it's likely to be temporary. So I wouldn't go for deep pullbacks on this one. I'd probably want to try and get out fairly shallow. So just be careful if you are short on it. Look for logical areas which price is going to come back and retest. This high is an obvious spot of resistance. Yeah, we tapped it twice, then we broke it. That rally is where we found a little bit of selling pressure. We slammed through it. So there's that high there. So that level there, which is 150 ADR today, is in profit for me on this position. So if we do start to get some price action around that point, might well jump ship on it because it is bullish. This is counter trend, obviously. So, but we've got loads of propulsion gap targets to the downside. So if it does go for a deeper pullback, we get some US dollar strength, then that's what's going to happen. News-wise this week, we've got Empire State Manufacturing this afternoon, which doesn't do a lot. We've got the CPI and the CAD. The CAD will move the US dollar, obviously, as well. And then we've got retail sales for the US dollar tomorrow. So if we do get decent figures coming out on CPI for the Canadian dollar, obviously, all these moves that we've seen over the last week are all going to unfold rather. So, tomorrow is where we would expect all these pullbacks to kick in, basically. So tomorrow, potentially big down day for everything against the US dollar and the CAD. And then back to Wednesday, CPI for the pound could strengthen that up again. So we're looking for 8.2. The likelihood is we should get that or better. However, the last set of figures we had were flat, i.e. we got exactly, well, we got 0.1 above what we were expecting. So pretty much a hit. So it's very difficult to tell what's going to happen with that pound. If those CPI figures do come down, it will take pressure off the Bank of England. We might only get a 1% increase, but we are still getting an increase. Even if the CPI figures come out as negative and that comes out as red, you would expect market reaction to be that. The market knows we are still putting interest rates up, which is going to make the pound pretty much the most attractive thing on the planet to put your money in. We're sitting at 5. We've got 6 to 6.25 as our forecast terminal rate, way higher than everybody else. So, yeah, this is why the pound's rallying and why it should continue to rally. So just be careful if you're shorting the pound, obviously, because it is still bullish. So that's pound and US dollar Swiss. Huge big push to the downside. This one, as we've looked at already on the hourly RSI. Sorry. We looked at this one on the monthly range. So US dollar Swiss hit its monthly range. 4-hour RSI extension, absolutely huge. Yeah, so big move, looking for that pullback on the move. So again, US dollar massively weak. Swiss franc will power up with the euro. So really need some bullish news on this US dollar, which at the moment, market's just not interested in buying it. So huge extension, biggest extension. I think we looked at this one, didn't we, on Friday? Biggest extension I think we've ever had on the US dollar Swiss, bar the Swiss franc peg removal. So looking for a pushback. Target's all the way up there. Unlikely we'll hold it until there. But that monthly low is probably your most logical spot. Which is this line here. Yeah, for a pullback. Failing that, back up into last month's low, which is there. So, but this little move here, that's a 50% retracement on it. So that basically, I think, is probably where I would be most keen to get out rather than trying to hold it for a bit longer. But, they may well come out super hawkish on the US dollar, but at the minute, on its knees. So, Euro CAD. I'm going to have a look at Euro CAD. Already looked at Euro CAD. Already done Euro CAD, Michael. You've missed it. But it's extended. I'm short. 4-hour RSI extension. Hourly was extended on Friday. So good short. This level here is where we're bouncing at the moment. So it will either do that bounce and pull back, and then obviously we'll either go up there or we will continue market structure short. One or the other, but either way, massively extended. So looking for a pullback. There we go. That's everything covered that I need to cover this morning. DAX is still rallying. So if you're in the DAX long on the ORB, hold it. $1,800. I'd watch this low, this candle here. We've just obviously had a nice ORB, pull back, pushed, pull back, pushed. We're in a pullback at the moment. It's going to continue to push, absolutely fine. If it breaks down below this candle, we're going to get back down again below Friday's low. There's a chance that this might just go into a kind of rotation. So if you've got longs, potentially just start trading the candles, really, and maybe take a partial if it does start to push back down again, just to protect some of that profit. US indices seem to be having a bit of a rally, but obviously this is the Globex section in New York, so don't get a lot of volatility, but they are all slightly bullish along with the DAX today. Seems to be running out of steam a little bit though. So right, that's all I've got for today. Nothing else to discuss. Just managing the positions from last week at the moment. Banked 0.9 today. I just banked something else. Oh yeah, I banked that New Zealand dollar US dollar, didn't I? Took one off of that. Not really going anywhere at the moment. So today, basically news-wise, obviously 9:15, we've got in roughly half an hour, we've got Lagarde speaking. So we haven't had anything out of Lagarde for a while. Deliver pre-recorded opening remarks at the ECB conference in Frankfurt. Okay, so this is a pre-recorded speech. So yeah, it's unlikely, because there's no press conference and she's not actually there. It's unlikely we're going to get any unexpected news, is it? So I wouldn't expect a lot of movement out of that unless she says something in her pre-recorded thing that obviously is bullish or bearish for the euro. But only news we've got is 1:30 this afternoon. So just be aware of that this afternoon. We may get a little bit of volatility creeping in on the US dollar. Other than that, there's no news today. So US Open should be as expected, just normal volatility. There's no stocks today with earnings reports. We're kicking off tomorrow with the Bank of America and Morgan Stanley pre-market. So there's potential for movement and volatility to start tomorrow afternoon in the US session, but today should just be business as usual. Probably going to find when you've got no earnings days in earnings fortnight, you quite often get fairly low volatility because the market doesn't want to dump tons of money into stocks until it knows what those confirmed earnings are. So bear in mind, obviously, just because we've got one coming out doesn't mean it's just that one that's going to move. If that comes out with a massive negative or a massive positive, there will be sector purchases happening. Yeah. So obviously the market has multiple sectors: tech sector, manufacturing sector, motor sector, pharmaceutical sector, etc., etc. So if you get a load of banks, for example, all reporting positive earnings, you would assume that the market is going to have positive earnings across the sector. So the sector gets bought, which is why you get these big, strong waves of movements and big pushes, because the market's buying sectors at a time. So when you've got days like this where we haven't got any news, they don't want to do any sector purchases. They don't want to do any individual stock purchases. So you tend to get low volatility. So just be careful. But with low volatility also can come high, big movement, because obviously there's less volatility in the market. So when there's big orders placed, the market moves further because there's less resistance for it. So it can also be quite whippy. You never know. So just be, if you're going to be super sensitive about, strategies like the opening range breakout strategy, always looking for why does certain thing do a certain thing on a certain day. These are the days where you would probably go, right, I'm going to go half risk today, because if it's going to whipsaw, I'm going to lose half as much money. If it does go my way, brilliant, I'll still make money, but I won't make as much. These are the days we know we're going to get big volatility coming through. So, up to you. Some people don't trade days like this, especially in the stock markets. If there's no earners, there's no opportunities. So, but I'll be trading it this afternoon. We'll see where we go. But if I've had a decent day on the DAX, for example, then half the risk. Make sure you don't give it all back just because the market's going to have a dodgy afternoon. Right, so that's all for this morning. I'll be back 2:20 this afternoon. If you need anything, I'll be in the Telegram group as usual. Be aware of the news for Lagarde at 9:15 and 1:30 for the manufacturing, and then back tomorrow for the DAX as usual. And obviously, we'll see how we go with the stock market this afternoon on the NASDAQ. I'm just going to get the pound New Zealand just before I go. We're just getting a little bit of a rally going on. I'm just going to see if that's the pound. Yeah, pound's rallying this morning. So we might get some pre-market movement ahead of the CPI figures on Wednesday. We might get a couple of days of rallying where they're positioning ahead of that. Dow's just gapped up. Another little pop on the DAX. So I'm just watching this pound New Zealand. TP on this I've got set here. Main reason for that TP, obviously you can see there's massive propulsion gaps to the upside, but it's this big accumulation. So bang in the middle of that balance for 3 days, basically, which is that high. So we could find resistance there. And it's, it's up to you where you set your TPs, but obviously that is the next resistance to the upside. So quite probable it's going to go all the way up there, isn't it? But that's 150 ADR. So I'd rather just be out and be banked at the moment. But if you want to set your target higher, go for it. Right, I'll be back this afternoon. Anything you need, let me know. Otherwise, have a good day, and I will see you this afternoon. If not, tomorrow morning, same time for the Frankfurt session. Have a good day.